Hi there traders, this is Steve Miley, the market chartist for FX Explained, and our regular weekly macro watch update for the week commencing 31st of August 2020, looking back at those macroeconomic data, central bank and geopolitical events that shaped markets into the end of August and looking out into the beginning of September. Stocks surge, Dow raises 2020 losses. So we're going to kick off with those macroeconomic and geopolitical developments from the past week. And the first thing we saw at the beginning of last week was that the fast tracking by President Trump of COVID-19 plasma treatments and also the Astra Zeneca Oxford University vaccine trials. He's fast tracked both of those. Not really significant short-term developments, but the market liked it, kept it in risk-on mode and helped push stocks higher at the beginning of last week. And this was also accompanied by the early part of last week, Monday going into Tuesday, of a trade call between the US and China. After that, remember that announcement from about a week ago in here when they were due to have a meeting in here to look at the trade progress from the phase one trade deal. That was cancelled at the 11th hour, but then a trade call in here by the various delegates in here has certainly helped to allay market fears of a renewal of hostilities between the US and China. The UK-EU trade talks, however, have continued to disappoint in here with little progress made, and markets certainly, though, not really reacting with much disappointment, with the pound staying strong against the US dollar, which is weak anyway, but also staying positive, the pound versus the euro. Now, the main event of the week was Jerome Powell at Jackson Hole in here, the economic symposium, where, as expected, he announced average inflation targeting. Well, what does that mean? Well, it means that rather than targeting a specific level of inflation, the Fed are now going to adopt average inflation targeting. And what this probably means, and the main market implication, is potentially higher inflation going down the line, which the bond markets didn't like. However, it does mean that they can be more accommodative on interest rates in the short term, focusing more on employment, focusing more on economic recovery and economic growth. And this means probably shorter term rates lower for longer. So the equity markets like that, and it was a negative for the US dollar, as we'll come to. And right at the end of the week, we had the sad news that Shinzo Abe, the Japanese Prime Minister, has announced that he's going to resign due to ill health. This had an immediate negative impact on the Japanese stock average, the Nikkei 225 falling, and also a rally in the Japanese yen, as it's seen as like a localized risk-off move, seeing repatriation into a yen, so the yen strengthening. So now let's take a look at the global financial market developments of all this. How's it impacted on markets? Well, US equity markets staying very much in risk-on mode, leading global risk assets higher. The Dow Jones Industrial Average was the standout in here on the last week in that it raised 2020 losses. That was kind of the big key kind of development in here, the headline-grabbing development. The Dow Jones on Friday, at the end of last week, pushing above its closing level from the end of last year, from the end of 2019, actually up now for the year. But the S&P 500 continue its storm higher in here, with the cash market having broken above the all-time high from February, basically the previous week. Last week we saw the futures market break above that level, and also 30 through 3,400, and then to surge higher and also take out 3,500 for the benchmark US equity average, the S&P 500. European equity indices not quite doing so well. We did get a pop higher earlier in the week, but what we also saw in here was a push higher in here, but then the market unable to really break out to the top side. We also saw US yields pushing higher, particularly at the end of the week. That push higher by US yields was really driven at the end of the week by that average inflation targeting, concerns from the bond markets that we would see potential inflationary pressures, seeing bonds higher in yield, lower in price. But for the US dollar, that AIT, that average inflation targeting, was seen as negative for the dollar. Short-term interest rates lower for longer, so we saw the US dollar weaken again, moving back to the lows we'd previously seen in August. On the commodities front, copper moving back up in the last week, close to the highs that we saw earlier in August, those recently posted new multi-month highs. The gold future in here rebounding, although it's very much erratic, still in a range environment, but rebounding and aiming back to the top side. And crude oil still very much sideways in here, but resilient, but cautious as well. So then finally, let's turn our attention to the week ahead, commencing the 31st of August 2020. Well, on the central bank side, the RBA, the Reserve Bank of Australia, in play on Tuesday, so we're watching out for that. And we do have some significant data this week. It's a UK bank holiday on Monday, so markets are closed in here. The main focus in here, alongside that RBA interest rate decision, are going to be the global market and the US ISM manufacturing PMI data Tuesday. And then we jump to Thursday, where we see the global market and US ISM services and composite PMI data. That's all going to be probably the standouts in here for the first part of the week. And then running into the very end of the week, that US employment report is always much watched. We get the Canadian employment report too on Friday. I'm going to wish you all a great trading week. Please do stay safe out there, and I'll be back with you soon for another Macro Watch. So traders, don't forget to catch us on the next FX Explained Macro Watch and all the great content on fxexplained.co.uk.